Hey everybody, this is George and welcome to another show. Here's the thing. So pending sales are up, mortgage rates are down, and our inventory, well, it's dropping. So you have to ask yourself, what the heck? Why aren't more buyers out there? And you might think, oh yeah, it's the time of year and whatnot, which seasonally that is so true. But here's the funny thing. Let's take a look at our first little chart here. So note that the new listings is at 490, which seasonally is low and normally low, so that's not a problem. But look at our pending 1,002. That's a lot of people out there doing their thing. And in fact, if you look at the solds, we said that we should only be seeing about 500, 600, 700 at any one time. We're cresting really close actually to 900. And what that is telling us is that there's a lot of buyers out there that are recognizing that with more inventory, less competition, better interest rates, that, like we've been telling you, it is a great time to start looking for a home. And so let's take a little bit of a look at kind of what's happening out there. What is trending? So the Feds, they raised their Fed rate again another 0.5%, 50 basis points. 50 basis point is 0.5%. 100 basis points is 1%. All right. So does that mean that interest rates went up? No, because Feds do not control long-term mortgage rates. Those are publicly traded. Look at your mortgage-backed securities. Look at your bonds. Your 10-year Treasury. That is what defines your mortgage interest rates. Now, the Feds do and can have an impact on mortgage rates. Okay. Now, that's a given, and that's why many times they will have a lagging experience, or sometimes Feds rates go up, mortgage rates come down. We did see a little bit of a bump yesterday in rate, and not unexpected based on some of the information that came out as far as CPI and other metrics that they monitor. So a trend, home office updates and induction cooktops are in for 2023, while high pile carpet, subway tiles, and open shelving, it's on its way out. So remember, as you're doing your updates, hey, listen, things, they're trends, they're fashions. If you're looking at something you want a little bit more timeless, just keep that in mind as you're, doing your planning and, working with somebody who is an actual designer can be extremely helpful. bpcontractors.com. We've got some folks on there that you can chat with, give you some really good advice and whatnot. And then you can decide, what best fits your needs. And of course, what would also have the greatest appeal to a market if you're looking at, marketing or selling your home, say in the next, 1 to 5 years. Anyway, just something to keep in mind. All right. NAR predicts a total of 4.78 million existing homes for sale in 2023, which is going to be down from 5.13 million, which is normal, and actually was going to be this year as of 2022. So consumer prices came in better than expected in November, just up 0.1% from October, and up 7.1% over last year. So we still have more inflation than what we had last year. All right, that's a given, because then when we take a look at this right here, over the past 5 years, right, rents have gone up 36.9%, while the average wage went up 23%. This was part of some information that we gave midweek, as explaining that for tenants, if you are a renter, you need to watch our last video and change that outcome, because right now renters are spending 2.2% more each month than a homeowner is, and in 2023 it is going to go up even more. All right, inflation is scheduled to go up more. Rents will continue to go up. Home prices are scheduled to go up about 4% 4% up does not mean down. Just, for those, mathematical geniuses out there, 4% is still an appreciation. Now, granted, there's a report that we're going to go over, and they're going to talk about nationally where certain prices came down. Seattle, they said, came down about 1%. Seattle meaning this generalized area. And that's important because, again, we are not some of the bigger numbers that some of the areas are seeing. Well, that's fine, whatever. The key is, what are we doing? So remember, hey, like and subscribe for this channel. This way you get those updates. It also helps people that, the algorithm, so that when they're out looking for a home, they're getting information, they can come here and they can get really good free information from. We are considered one of the #1 real estate channels for consistency, for content, which is awesome. And we are consistent, so that is great. And we're accurate. Woohoo! That's even better. So as we go through things, remember, like, subscribe, and share the information. All right. If you like the person, you should share it with them. If you don't like the information, or if you don't like the person, send them something from Florida. They'll never get in the market. All right, moving on. Okay, let's talk a little bit about what's been happening on a bigger scale here. All right. So gonna switch screens here, and let's head over to, forgive me, I'm still working and getting familiar with this. So we take a look at what we're doing here on a local basis. All right. So pop my little head in there for you. So when you take a look at this, and some people say, oh my gosh, George, look at that. We're like 200% higher in inventory than we were last year at this time. Oh yeah. We only had 2,900 homes. That is like peanuts. And the fact that we actually have 2 months of inventory, not 7 days of inventory, 2 months of inventory, that's a massive help to everybody. All right. And even sellers are benefiting from it because now they don't have to worry about being homeless. They actually have time to go out and look for their next home. Whether they are downsizing or upsizing, doesn't matter. They have more time. And any consideration that is given for price is given on both sides. I had one seller said, yeah, but George, if I'm buying a lesser home, that percentage of difference is not the same. I said, that might be true. However, you have a new opportunity. That opportunity did not exist before. So there's a trade-off. And so keep that in mind as you are looking at, hey, is it time to consider, marketing a home? Is it still a good time? Well, I can clearly show you that it is an excellent time when you look at the pending listings. Absolutely best time. What is the all-time very best time right now? Buy new construction. When you take a look at the new construction numbers, we are on par with where we have been historically. Now, last week we showed you the average of 10 days, and that's super cool or not 10 days, but 10 years. 10 days would have been a little tight. But anyway, over the last 10 years, you can see that it is very consistent all the way through. What is going to be the biggest takeaway? The biggest takeaway that we're seeing right now is the fact that we just are not having a lot of inventory. Now, this chart here, shows you the number of days new construction is on market. Now, this is the entire Northwest MLS. It's not just any one area, it's the entire area. But as you can see, on average, we're at 9 days. And they say, oh, George, that's up 28%. Okay, when you double a small number, it is still a small number. If you double 2, it's only 4. Here, we're up 28%. So we went from 6 days to 9 days. That's a little bit more than 25%, but nonetheless, so the same point. It's not a big number. It's still very low. And as you can see right here, we are still super low as far as market times, and inventory is super low. So keeping that in mind, you need to, again, break out of the shell, quit watching what some of the other media channels are saying and that our market is spiraling downwards. It is not. And it is clear that there's a lot of buyers that feel the same way, as homes being showed is actually still up quite a bit. All right. So if you have questions, hey, reach out, ask them. There's no cost. There's no strings attached. If you're looking for our monthly market update or your market update in your specific area, fire it off. Let us know where you're at. If you don't feel comfortable sharing your address, give us a neighborhood and a zip code, and we'll be able to, refine it down a little bit better and a little bit about what your house is. That way it's a little more accurate. That's only if you're into accuracy. All right. So when we take a look, let's pop back here. And when we take a look at what our mortgage rates are today, we're at 6.31%. And as you can see, we have been in a downward trending direction really since October. And so since we've seen the mortgage rates that went from, like 3.875, 4%, all the way up to 7.3%, they have been coming down over the last month, and we're really about 6-7 weeks. They've been coming back down. They hit into the high fives for a little bit. Now they're at about 6.3, and that is super cool because that is going to be our new norm. And between 5 and 6%, that is normal for us, or should be, I should say, normal for us. 7% is getting a little on the high side. 9% is definitely too high. But in the first quarter of 2023, as we are seeing certain metrics kind of follow through, I expect interest rates to drop down briefly and then pop back up again. They will probably be in the mid sixes. They will probably bounce against the sevens a couple of times. I don't expect them to go too much more than that, but that's something to keep in mind. So let's get a little support when we talk about pricing. Home prices just hit a turning point nearly after a year, but will buyers miss this amid the holidays? That's from Realtor.com. And I totally agree, because I'll tell you, right now is the best time to be in front of sellers right now, because they're a little bit more motivated. They want to make sure that they can make their transition. They can move along. They can do the things that they need to do. And if you are not doing that, okay, then you are going to be missing the boat, hands down. There are some folks that say, oh my gosh, George, interest rates are so high. No, they're not. You were just so spoiled with those super, super crazy low interest rates that we just don't see anymore. And just remember, when you're considering making a purchase, okay, there's a lot of things that become fixed at that point. Your interest rate becomes fixed right after you go under contract with a purchase and sale agreement. In fact, there are some loan programs that allow you to fix the rate before, and that is something you really should be looking at. Some folks say that were looking on Monday, and then Tuesday rates went up a quarter to 0.5%, depending on your loan program. They could have benefited from that much lower rate. So lock in now. If you want a couple of recommendations, we'll post our lenders for you, and you can give them a quick jingle and get that squared away. All right. If not, look, once you lock in on a purchase and sale agreement, you can lock your rate. Okay. Then if it goes down in the future, you can go down. If it goes up, then you're a winner. Right. So at this point, truly give that consideration of, is now a good time? And don't tell me that I don't have my down payment all saved up. There are other options for that are just as beneficial. Keep that in mind. Watch my video from last week. There you go. All right. So let's come back here. Let's take a look at what else they said. So they said, look, the weekly housing trend median price was up 9.5%. That's your list price. Average listings are up 55%. That's not unexpected. Time on market 10 days longer. Mortgage interest rates are at 6.31. Okay, that's a given. We knew that, and all of that information is exactly what it was last week, which again just tells you that we're starting to see a lot more stability, but it doesn't end there. So when we head back again and we take a look at the downward trend, yet the past 5 weeks, things have declined as far as mortgage rates. It says, despite the downward trends, many buyers still seem to be abstaining from the market activity. So why aren't home shoppers taking advantage of the 1-2 combo of slowing prices and lower mortgage rates? Well, part of that, I think, is the fact that they have their brains elsewhere for the holidays, and which is not unexpected. And we are seeing normal seasonal trends minus our inventory has been dropping and not going up, and mortgage rates have been coming down, not going up, and buyer activity, instead of going down, has been going up. Don't miss the boat. Take a very important key question. You know, they say when opportunity knocks, you should answer. There, I was knocking. Well, not me, but opportunity is. Make sure you're paying attention. All right, don't listen to me. Don't listen to Realtor.com. Let's move on. Let's take a look at what does Redfin have to say. All right, so housing market update. Early stage demand up notably from October trough. Mortgage purchase applications and Redfin home buyer demand index, which is interesting, that's a really great metric, are up by double digits since bottoming out early this fall, but demand is still much lower than it was a year ago. No kidding. Let's state the obvious there. Let's see, we double interest rates and we're still going to be a little bit slow, but on the whole, understand it is definitely on an upward trend. Let's continue. So it says, let's see here, mortgage purchase applications are up 14% since the end of October. The weekly average came in at 6.31. This is down from the peak of 7.08% during the last week of October, saving the typical home buyer more than $200 per month. For a tenant that does not want to see that continue to raise, because right now, just in the interest rates between October and today, that's $200 a month that you could save on your rent and apply it to your retirement, apply it to something else, do a principal buy down, and pay off your mortgage 7 to 10 years faster. Okay, look, reinvest in yourself. Just saying, there's a lot of folks out there saying, wait a second, the market's not doing what everybody predicted. Well, minus us, we figured that this is what it would do. However, understand, unless you exercise the initiative, then you're going to lose the opportunity. I'm just saying, you're going to have another opportunity in Q1, first quarter of 2023, maybe towards the end of 2023 next year. Next year is going to be slim pickings, guys. I mean, slim pickings. Not many sellers are going to come on market. So we're going to have a limited inventory of homes available. Just understand that. Not many sellers are going to trade their 3% mortgage. I mean, listen, 70% of the mortgages out there in and around are below 4%. Not many people are going to trade that for a 6 or 7% mortgage. They're just not. They're going to either fix up their home, or they're going to rent their home, or they're going to sell and relocate. Okay. Or last one, they'll rent their home and they will actually buy one here, right? And so that's not going to do you any good, because the only time that we see an increase in inventory is not when a first-time buyer comes in, because they're a taker, right? They take a home off the market. If you have a move-up buyer, they put a home on the market and they buy a home. So they're a net zero. The only people that add homes are the people that put a home on the market and just get out of Dodge or don't repurchase. That's not that many people. So understand, our inventory is going to continue to dwindle. So keep that in mind as you're looking at what you want to do. Where should I be making my focus? Exercise and know all of your options. Don't just dismiss them. All right, let's get along. We get on to our next. I think I have one more slide for you guys. There we go. Home prices fell earlier this year from 15 of the 50 most popular metro areas. Seattle hit this statistic, basically saying, hey, we hit a 1% price reduction. It depends on where. The luxury homes above, $2 million, those are still doing incredibly well. Our median price on the east side in Seattle between 900 and 1.2, those are the ones getting beat up a little bit. It's also the greatest volume of buyers, at least at that point, that we're seeing for residential, not condos, manufactured home, vacant land, none of that, just single family homes. So keep that in mind. So really, at the end of the day, when you take a look at all of the metrics, when we come back, right, And I come back, hang on a second, I'm going to get back to an important chart right there. Okay. When we come back and we start taking a look at these numbers, our numbers are solid still. Don't think that we're on some crazy roller coaster going down, because I think you're going to be waiting a while. I'm not saying that we're not going to see in some areas, prices hedging down a little bit, and that will be short term. We are still anticipating and expecting a 4% on average appreciation going up. And that is going to, well, we'll see. We're normally pretty darn accurate, and we like that. And so we do this every week. So make sure at the end of the day, remember to like and subscribe. And I like it when you subscribe, because then it tells us that you like our information. I like it when you ask questions, because the team, then they get to interact. We have a really good time. But we'll see. Let's see how many questions we get this next week. In the meantime, you guys have an absolutely amazing weekend. It's a little cloudy out there. Have an amazing weekend out there. And Merry Christmas to each and every single one of your families. We do wish you, from all of us to all of you, all the very best to you and your family. And we will see you on the next video. All right, take care.